Good Tuesday morning, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. And there's the disclaimer.
Awesome.
Okay. I'm going to share my screen. As I'm doing this, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into the live chat on YouTube. Will's monitoring it, and he'll read them back to me. And what we'll do for now is take a couple minutes, give you a chance to type in those questions, and we will review the pre-market report to see if we could get some insights what's going on in the pre-market hours. All right, so pre-market report. We start out up top here. We have a calendar view, which does allow you to go back to a historical date if you wish to see what happened in a pre-market on that date. We have a week's worth of data up here from a top level, just to see if we could spot anything unusual or any type of trends. Today, we are on February 20th over here. And so far, we see 498 stocks trading higher in the pre-market, 550 stocks trading lower. As far as volume goes, we have 261 million shares trading on up volume, 71 million shares trading on down volume. And if we convert that volume to dollar value, we have $2.1 billion worth of stock trading higher, $3.9 billion worth of stock trading lower. From that perspective, it looks like so far in the pre-market hours, trading has, I would say, a bearish lean. So let's look at it from a couple more perspectives, and then we'll move on to the questions. All right, so let's move down here. And now we see a list of stocks that are trading in the pre-market hours. We have the symbols, stock price, percent change, any type of alerts. And we have it divided by our most active list, our biggest percentage gainers and biggest percentage decliners. There are 85 stocks that made our biggest percentage gainers list, 97 on our biggest percentage decliners list. So this also leans more bearish from this perspective. Now, to make this list, we do set thresholds for liquidity, price change, volume, and so forth, because stocks in the pre-market can trade sometimes with very little volume, low liquidity. But if the stock is listed on a major US exchange and it's trading at pre-market hours and meets our thresholds, it can make this list. That includes ETFs, it includes small cap stocks, it could be a preferred stock, closed-end fund. So to narrow down to a smaller group of stocks, we could use the filters above. If you have a watch list and you save the group of stocks you want to monitor, you could filter this list using your watch list. We're going to use this filter here in ETF. Click on it. You get a drop-down menu of different ETFs to select from. When you select an ETF, let's do this SPY in our example, which is the S&P 500 ETF. When we selected that ETF, the list below got filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we have 7 stocks that made it onto our largest percentage gainers list, 18 on our largest decliners list in the pre-market. So that also indicates that so far traders in the pre-market have a bearish lean or negative lean. We gave it a couple minutes, Will. If we have questions, I'll take them now.
It says Rob was asking, Will, I noticed on Dimitri's screen that he had a single leg trades tabs when he was explaining the new multi-leg. Will we get that single soon? I think maybe you explained that even on Friday, but anyways, you want to answer that?
Yeah. So let me go. I'll go to SPY. Nice. You guys, when I do these shows or demos, I'm using another version most of the time that I test new features on. And those new features that are in test mode, you're not going to see on your version until until they're ready to get published out. So the one tab that Rob's looking at is this single leg trades. And we started out with the multi-leg trades. This single leg trades, it's still in test mode. There are bugs in there that we have to fix. There are exceptions in there that we have to determine how to handle it. There are enhancements in there that we're working on that are not yet part of it. So you do see it on my version because my version includes everything that I'm currently testing and evaluating and sending back feedback to our developers. So you won't see it on your version, right? And we're not going to push something out that's not ready or is creating errors, that we know about. The question is, I guess, when are we going to release this? And this single leg trades will be basically the same idea what we did with multi-leg trades over here in SPY, where you could see down here, we took the multi-leg trades that are trading in that are trading in the options market, and we run them through our proprietary software that analyzes the trades, and then in this situation, it also categorizes the option strategy and provides more details about what's going on in multi-leg trades. Okay, so this is something that keep in mind we're doing. This isn't coming directly from the exchange because they give you raw data. We have to do that analysis ourselves. Of course, we can't take the single leg trades and do it because single leg trades are different. There are other details and categorizations that we're going to be doing that only apply to single leg trades. Okay, so for example, we're just looking here. Here's multi-leg trades in SPY. This is from Friday's trading. We're not open today, so this is as of Friday's close. We could see the top one was a ratio put spread, 1/2 ratio put spread, regular put spread that traded 36,000 contracts, diagonal double call spread, and so forth. You can see many different strategies here. And I'm going to probably just stick with this one today. As far as the multi-leg trade goes, as far as the single leg trade goes, it's still early for me to say when it will. Actually, I didn't even demo it or anything. You just kind of saw it. You just happened to see it on my version. I don't know when it will be available yet, because even before we push that out, we're still working on the enhancements on the multi-leg trades, and we're also working on the SPX, VIX, and the index options that you guys don't see yet, and those will come out first. Okay, so until those come out and we're comfortable that we worked out all the bugs, all the errors, all the exceptions that come along after we publish, right? So first we fix everything that internally through our own testing. And unfortunately, I don't know how many of you have worked with software before, but once you allow other users to use the software, new issues come up that you didn't anticipate, or you didn't use it that way or test it that way. And that's just part of software development. And that's what's happening right now with the multi-leg trades. As we pushed it out, we're seeing new errors come up and people reporting new bugs that we didn't see, and we're fixing them until we get those resolved, to the point where it's stable and we don't see, errors on a daily basis or bug reports from users on a daily basis, so we know, like, once it's stable, we know internally how many we should be seeing, maybe once a week or something, then we move on to the next feature, right? Because we don't want to send out, 5 new features that all are buggy. And that just creates, bad user experience, and it creates lots of problems for the entire platform, actually. So I don't know what I've been getting this question a lot. I think people actually, once they saw that, I've been getting a lot of emails about it. Well, when is that available? When is that? And unfortunately, I don't have a date for you right now, because it's in the very early stages. And at this point, I don't even know what the estimate will be, because even ahead of that, we're just trying to fix the existing bugs, but that's my right now assessment.
Perfect. Rob then asks, excellent, thanks, Dimitri. We hope to have the single leg soon. He says, he's asking about, I know we've mentioned it before, SPX and VIX.
Yeah.
You think that's going to be coming in a time frame, he's asking?
So the SPX and VIX, yeah, also, I don't have an estimate on that either. But that will be before the single leg trades. And part of also what's holding up SPX and VIX is that these are the index options have their own nuances, their own different settlements and expirations that don't fit into the models for single equities, or and those things create, because our model wasn't created, the when I say models in the background to collect the data, clean the data, prepare the data for analysis, and then do the analysis. It wasn't compatible with those index data. So that's one thing we're trying to work out. And then on top of that, how do we bring in the analytics that you're using right now? Even this report here doesn't fit into that index data, where we could just plug it into our existing software. It's like a side-by-side thing where we're designing it differently for index data than it is for a single stock equity or an ETF or so forth. So it's there are a lot of differences there, and as I feel like we're getting closer, then I see new things pop up. I know that we will make it available at some point, and I would say before the summer. I don't want to put I don't want to say give you guys an earlier date. It will be available at some point. However, we need to get it to a, you know, to a condition where we feel like, okay, this is, we could push it out, even though, we were going to expect bug reports and errors, but it has to be at a place where we'll feel comfortable pushing it out.
Perfect.
So I don't, you'll probably see updates to this report before you see the SPX VIX come out. All right, so the next things will probably be enhancements to the existing report, which will be, on these multi-leg trades. So yeah, that's pretty much what the updates I have with the. Yeah, as we get closer, I'll give you guys more updates. I'll tell you when we're close. But right now I don't feel like it's that close.
All right, perfect.
Yep.
No other questions have popped up.
Okay. Um, so yeah, so while we're on here in SPY, maybe what we'll do is, so what are we doing here is organizing the trades on the day in SPY, and it's running through our software, and then it's categorized and saying these based on, the data and everything that we collected, these are the different types of strategies that we detected on Friday in SPY. So there are 64 different types of strategies. Okay, so for example, a call spread and put spread are two different types of strategies. Butterfly is a different strategy. Now you could have call spread with different variations, right? And that's what it's shown here, that the put spread, you could see in total 381,894 contracts that traded in SPY were attributed to put spreads, and there are 2,220 different unique put spreads in SPY on Friday. What's unique? Well, you could have a put spread in different expirations, or put spread in the same expiration with different strikes. So it makes it unique, right? You could have a 100 and 105 strike. You could have 100 and 120 strike. So they're unique because they're different. And as you scroll down, you could see the different types of strategies that we detected, or the software detected, in SPY on Friday. So if you click on it, you'll get more details. Let's stay on the top one, all. And here it's sorted by the spread by the ones that traded the most contracts. Okay, so it's sorted by contracts, your volume. So the one with the biggest contracts was this ratio put spread. So it's a ratio put spread, not just a put spread, but it's a ratio. And what we'll do is maybe take a look at it. It traded 48,039 contracts, traded 113 separate times on Friday. And the first trade in this particular put spread was at 9:45.11, and the last one that we detected was at 10:39. So you can see that it traded at different times of the day. And really, like in the first hour of trading, basically. February 20th was the expiration, so that expires today, but there's 4 days to expiration. Sorry, not trading days, days to expiration when this traded, because this was on Friday. So at the time, there's 4 days left to expiration. The difference between the strike prices is $5, so it's a $5 spread between 496 and 491, and it's just there for convenience. And that N is an indication that at the time, this appeared to be a new position because the volume exceeded the open interest in the morning. Now, The volume weighted average price of the spread, it did trade different time, 113 separate times. So we took those, and when I click on it, we got the details below. So this is the spread, all the different times it traded. So you could see down here. Okay. But the summary is up top. So the volume weighted average price was 29 cents. What does that mean? Well, it did trade separate. Look, traded at 23 cents at 10:39, 23 cents at 10:38.59. So it traded at different prices. And this is the market at the time, 23 cents, 26, 23. So what we do is say, well, to summarize it, take the price times the volume at the time and do that for each one, sum them up and divide it by the volume. So we get the volume weighted average price. So instead of just averaging all the prices, we average them by volume. And then we do the same thing for the bid and offer. And what this provides us is where, I'll close it again. The VWAP price, 29 cents. And then we see 29 cents, 32 cents on the VWAP bid and offer, which basically shows us that they were trading on the bid side of the market, during these trades based on the VWAP prices. And the VWAP price, the bulk, where it traded in the stock was 514. Okay, so you could see here that the stock dipped a little bit below that, closed at 499.51, and today we're down a little bit. The price went out at 26 cents, 29 cents. So that was the current market at the end of the day, 26.29. So you could see that it ticked up. Oh, I'm sorry, down. Sorry, it's ticked down, right? From 29.32, 29 cent bid 32 to 26 bid offered at 29. Okay, the last price here, let me sort it by time. These are the low and high and the number of times traded. And if you open that up, you can see the details of it. Okay. Now, let me just see something. What we could do now, there's no history. So this was a new trade on the day. So you could see, so this is today's open interest. It just updated, but you could see that the volume, 32,000. This is today, so increased. And it was a 1x2, 16,000 by 32,000. So let's take a look at it from the perspective of the payout document, because this is going to expire today. Okay, this is Feb 20th. This is going to expire today. So we're going to take a look at it on the options chain just to analyze it, what it would look like. It seems like the person that initiated the trade sold it to the market makers, to the dealers, right? Because these were the markets at the time. Based on the trade prices, it looks like they were sold to the dealers. Okay. And it was trading on many different exchanges, as you can see here. Box, ICE, SIBO. So many different exchanges to get that liquidity. Let me just see the biggest volume. Okay, so 1,500. It could be just somebody had a big spread that they wanted to do and had to find liquidity on different exchanges and even different prices throughout the day. It could have been many different trades, but we don't know. But you could see a lot of them were pretty big trades. So it doesn't look like a lot of small trades to me, which would maybe indicate like a newsletter or something recommended it. Let's go to the options chain and analyze this trade. Okay, So it's the 496, 491 puts ratio put spread. I'm going to go to the options chain. And this is, by the way, the next feature will be, it'll just allow you to launch the options chain right from there. Right now I'm doing this manually, but the next feature that we're working on, you'll press a button and it'll set it up for you. So let's do the 496 put. I'm going to click on that. And I'm just going to choose the sell side for this one, 496 put, 44 cents. And then let's go to the 491 put, 9 cents, right? So here's the put spread, 496 put, selling, buying the 491 put. So we're going to analyze it. We have to choose a side. We're going to analyze it from this side. And that's just, looks like the side that was initiated. But this is a 1-by-1. And we know that the ratio is 1-by-2. So there are two of these. So one of the 496, two of the 491s. Okay, so I changed the ratio here. And let's calculate that and see what that looks like. So over here, this is what the payout diagram looks like. And it looks like, he sold it 29 cents, maybe VWAP price. So you can see that if the stock remains above that strike of 496. So at the time the stock was 500, right? It's 500. As long as the stock today closes above 496. Okay, so far this in the pre-market, then both these options expire worthless, and he would get to keep the credit of 29 cents. Okay. Now, the dealers were on the other side, right? So they went the other way to go. If it drops below 496 and you're short the 496 put, well, you're going to start losing on the 496 put, right? Because you're short it. So you sold it. And if it's in the money, you're going to have to buy back, close out of it. So let's say you're closing out and you're buying it back. Well, if the stock's 495, then the put's worth $1. You buy back for $1. You sold the whole thing for 29 cents. Well, it's a loss. You collected 29, but if 29 comes in and the dollar goes out, well, now you lost 71 cents, right? So as you could see here, this will start losing if it goes. Now, if it goes then to 491, well, you bought that put, so you're stopped out, right? So all of a sudden you're stopped out because you own the 491 put. So if it goes below 491, well, now you're below that, your 491 put offsets your 496 put below 491, right? They're both now in the money. However, he bought an extra one. So I guess the idea is, well, maybe the thought process is if we go below 491, then we might be in trouble on Friday and it's really going down. So you could see here that it has to get, below 486, for you to start actually winning on the downside. So you have two ways to win, if it just stays above that 496 strike, or if it really goes down hard. 491 is like the worst spot for this strategy. And I'm not saying he might be closing out, whatever, but this is what it looks like at expiration, which would be today. Well, it's after 9:31, so I'm gonna stop there.
Awesome job, Dima. Thanks so much, buddy.
All right, everyone, thank you for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trade and peace, communities. Everyone have a great